Pause this video right here and answer this question. Why should one invest? If you were able to answer this question, well and good. If no, then make a note of this. One needs to invest to create wealth, which will eventually help us to fulfill our financial goals. So, what is investing? Investing is an act of allocating money with the expectation of returns or capital appreciation. Now, let's forget about all these definitions and focus on basic fundamentals. People prefer investing their money in certain assets such as fixed deposits, gold, bonds, equities, or real estate. When we think of investing, first thing that comes to our mind is fixed deposit. And yes, why not? Because the fixed deposit is the most widely invested asset class among the investors. And the reason behind it is fixed deposits being risk free and also gives a fixed return in the form of interest. But since the standard of living, necessities, and lifestyle of people have evolved with time, fixed deposit may not work to achieve the future financial needs. Hence, it is very essential to plan an alternative investment plan accordingly. As Warren Buffett quotes, never depend on one source of income, but make investments to create another source. We all know the power of compounding. One of the golden rule of investing says start early and invest for long term. Compounding can multiply our money over a long period of time, which can create wealth by generating earnings from previous earnings. Let's consider an example to understand this. Vivek and Rahul are friends. Both are 30 years old. Vivek invests Rs 5,000 every month in an index fund for his retirement and gets an annual return of 11% on his investment and collects a neat corpus of Rs 1.42 crores at the end of 30 years by investing just 18 lakhs in total. On the other hand, Rahul does nothing for the first 20 years. At the age of 50, he realizes he has no savings left for his retirement and starts investing Rs 25,000 every month for next 10 years. He also manages to get annual return of 11% on his investments and accumulates Rs 54.75 lakhs for his retirement by investing 30 lakhs in total. Once both got retired, they invest the accumulated corpus in fixed deposits and earn an interest rate of 6%. Vivek gets a return of 71,000 every month, whereas Rahul gets a monthly return of Rs 27,375. So, how is it possible Vivek got higher returns? Vivek was just investing 5,000 every month, while Rahul invested 25,000 every month. This was possible because of the time and compounding factor which Vivek got in his investment. This shows the power of compounding, and it will benefit the most by investing in disciplined manner and giving enough time it to grow. This will not only help us achieve our financial goals, but also gives us financial freedom. I hope this was informative. Let's meet in the next video with more financial knowledge. Please like, share and subscribe. Till then, take care.